Good morning. Welcome to the Market Prep. Tuesday, June the 13th. That rousing song got me all excited for the trading day today. I don't know about you. As always, our focus is going to be on context, good risk management, and patience. My name is John Hoagland. Thanks for trusting me with your time. We've got the first step of a lot of the economic information due out this week, already out this morning. Number one, the FOMC meeting is beginning today. The release tomorrow at 1 p.m. Central. CPI numbers came out. The core CPI numbers, both of them month over month and year over year, came out as anticipated. But the CPI numbers year over year and month over month came out a bit lower than expected. We've seen some knee jerking in the equities and some of the other markets. We're going to check all this out in the charts extremely shortly here. So we've got stocks kind of sitting at above or near 2023 highs as we open up the session today. A lot of those rallies fueled by the tech sector and the AI stocks. Apple stock has hit a record high close, I guess, yesterday. Investors are going to be focusing on that CPI and what it will say to the FOMC prior to any decision on rates, again, due out tomorrow. Crude prices have recovered overnight on apparent bargain hunting after one close below that important inflection level of the weekly kickoff low. This morning, the VIX a little bit higher. Last I checked at 1503. It was at 1460 yesterday at this time. Dollar index a little bit lower this morning at 103.33. It was 103.4 yesterday. And the yield on the 10-year slightly lower than it was yesterday. This morning at 3.7%, yesterday at 3.72%. Now, some of these things may have changed in the few minutes we've been chatting here as the markets are settling in on what they're thinking about these CPI numbers. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep and everything we do. Subscribe to our YouTube channel so you get notification when we do go live. Speaking of going live, we've got a new coach's playbook today at 11:30. We've got Make Hoag Money here at right after the prep. There's the link so you can join the Zoom meeting if you would like to, and I look forward to seeing all of you there. Might be an interesting one today with the CPI numbers out and the markets digesting that information. Good morning, everybody. I see Caprice 101 first in the room, winning the prize this morning. Shaw, good morning to you. And Lacey says good morning to everyone. Pete, my brother Rick, good to see you. Love you. Dan Trader, Rooster, Timothy, Steven, Rob T, George, good morning to you. Charles March, Will, Jason, Grounds, Hero, Bill, Jason, good to see you. Eric Perry, good to see you. JD, John, good to see you. Dr. VJ Gnostic, Robert, good to see you. Sarah Hall, prayers and love as always to you. Robert Harrison, good morning to you and to all of our trading family. Kags, good morning. Chaz, Michael, Amanda, the weekly kickoff levels for S&P from last week and the week before. I can tell you those right now. Last week's weekly kickoff levels in the S&P. Be ready. The high, 43.27. The low, 41.60. The week before that, 42.55 and 41.20. Those were the weekly kickoff levels for the last 2 weeks. This week, of course, 43.71 and 42.70. All right. John, good morning. DA, Amanda, you're welcome. Sarah Hall. Yeah, the music I thought was pretty good, right? New music, no more Waka Waka. James, Hegel Matters, good morning. Alfred, FVB, good morning. Trading Research IT, John P. Dennis, JD Royalty, Rusty Golfer, my spirit animal, is with us this morning. William, Slim Jim, good to see you too. Josiah, Steven, it's good to see everybody this morning. Yeah, the new music I thought was pretty chipper. I thought it was pretty good. I was looking at some information this morning, and I was looking at one of the websites that I look at, investing.com, and they have most popular articles, right? Well, the most popular article, that the headline is, wait a minute, it changed. Hang on. Here it is. 4 reasons US stock market could continue to rally, and then the next one down, US stock market's weak rally appears unsustainable. So the experts are very conflicted in what they're thinking about these markets. I had to kind of chuckle to myself, just one right under the other. Nobody knows what's going on, right? So it's up to us to find accurate context, to put forth possible hypotheses as to what might happen. And when we see one of those hypotheses coming true, then we put in that strategy. So we're going to see what we can see here this morning. And as always, it is great to see everyone. Denise, nice to see you. You guys like the music? That's always nice. All right, let's jump into the charts here and we'll take a look and see what we're looking at this morning. Boy, that rally just walked right through weekly kickoff high yesterday, and the S&Ps just continuing to come in. Now, I think I talked about it a little bit last week, and I think there's a few people talking about the idea that the longer time frame, bigger traders, the banks, the funds, maybe a little bit underinvested in these equities markets. They've been looking for somewhat of a pullback in order to change their inventories to the long side. Now that we're above weekly kickoff high, that may be enough to push them into adjusting inventories at a higher price, right? But because we're in rollover, it's going to be very difficult to recognize if that is the case. We added 109,000 in open interest yesterday, and that is largely, if not entirely, created by the fact that we're in rollover, and a lot of these larger players have to move those positions over into the future month, which is the September month. So that makes the ability to gauge the auction process that we've got going on, that's been going relatively well to the upside, a little bit more difficult to gauge. Volume was okay yesterday. Open interest, we have this huge jump in open interest. If it wasn't rollover, I'd be like, oh my goodness, this auction process is getting an A, which it still might, but I can't see it as well because it's in rollover. It's one of the things about rollover that I don't like, of course, because it's making it more difficult for me to see how good the auction process is doing. Obviously, the market is attempting to go higher. It's difficult to gauge how good it's doing because it's in rollover. So we're going to trade what we see here. Weekly kickoff high, if it is revisited today, could become supportive after the CPI number. And with this number, of course, anything can happen. And we got to remember, we're still waiting for the FOMC information tomorrow. So there's a lot to be focusing on, a lot to be thinking about, and a lot of possible different hypotheses that we could come up with. Which one is going to ring true? Are any of them going to ring true? So here's the 30-minute chart. Here's our walk right through the weekly kickoff high, settling at the high, creating basically a big, long, late spike. It looks like the market is going to be opening with a gap. So that's going to be telling us that the market is accepting higher pricing, right? That's what it should be telling us. It's holding at higher pricing. It's opening above a late spike. That's going to, I think, further complicate things for us because we're not going to have anything really historical to lean on until we get back into last year. So we've got now possibly some long overnight inventory. We've seen some buyers come in and try and push this price higher. We're going to be opening with a gap. So that's going to be, one of the main nuances that I'm going to focus on this morning is, well, we've opened with a gap. If we can't close the gap, that's going to keep me looking for opportunities for longs. If we close the gap, there are a couple of different tiers of the late spike that occurred yesterday, and we're going to see this on the TPO chart. So we settled at 43.88. We settled up here. So technically, this is one of the bases of a late spike. The market continued in the last 30 minutes to push higher, and it closed up here. But there's also the late spike that began down here in K period, which is 43.6875. So as long as we hold As long as we hold above this level, I'll be looking for opportunities for longs, but that's a long way for the market to break down to that level. So overnight inventory may have something to do with it. The gap close might be supportive. If it's not supportive, the base of the M late spike might be supportive. This also might be supportive if the market pulls back. Before the CPI numbers, our overnight low was right at the base of the late spike from the M period right here. Now, how can I say that this whole thing is a spike? Well, there's a science to trading and there's an art to trading. When the market actually broke out and started to trade out of balance was down here in this K period breakout. That's when we took out the weekly kickoff high. We took out the high from yesterday. We took everything out, and that's when the market started to trade out of balance. So this is going to remain an important level if we even get there. Looking back at the 30-minute chart now, you can see, this was the high from Friday. Monday, we traded through the weekly kickoff high, and we've been really trading out of balance ever since. So it's going to be, I think a riskier day today. I think we're going to have a bigger range today, and I think it's going to be difficult to really put forth an early hypothesis. I want to see this market open up and see what happens. Opening range trade may be something we'll have to think about. Does the market pull back? Does it just continue to push higher? All of this is information that we're going to get after the market opens and during Make Hogue Money. So we'll take a good look and see what we can find during that. But the context, the auction is to the upside. How good it's doing, again, blurry because of rollover. Now let's take a look at crude oil, which is just about ready to open up. So we did close yesterday below weekly kickoff low. This area down here obviously has been a bit of a point of contention for price to continue lower. Now we've seen the market pull back up to the upside. We added 10,000 in open interest on decent volume yesterday, but remember, crude oil is in rollover. By the end of the week, we'll probably be trading the next contract, which is the August contract, or Q. So now not only are our equities in rollover, crude oil is in rollover, our currencies are in rollover, and natural gas is coming into rollover. So everything just about we look at is in rollover except gold and treasuries. That definitely confuses things and makes things a little bit more difficult to make decisions. So be cautious, be careful, maybe trade size down a little bit. It's up to you how you're going to handle this. But again, it's making the market a little bit blurry. So now it looks like we've pulled back above the weekly kickoff low. Weekly kickoff low is going to be somewhat pivotal. I'm going to be looking for that as a support level. If it starts to show acceptance below, I'll look at that as a resistance level. It might be easy to get chopped up around this area, so be careful. Take a look at the 30-minute chart. Okay. So we left a huge gap yesterday. Huge gap. So I'm going to change this. Well, I'm not going to worry about it right now, but this gap is pretty big. We have a naked point of control all the way up here. We've kind of been closing this gap, but the real gap is up to here. We're opening and have opened with a gap. We've got overnight inventory to the long side. Last week's low showing signs of possible resistance. Weekly kickoff high showing signs of possible support. We may fill in this gap here before looking to finish the gap up here or trade to the weekly kickoff high, and an inability to hold the weekly kickoff low might be putting us in a situation where we might look to go lower. It's anybody's game. Anything can happen, right? So ACH, take a look at the TPO chart. We'll see if there's any help here. Not really. I mean, the initial balance was the high. 5 out of 7 of our markets had an initial balance at the high of the right or the low of the regular trading hour session. I'm going to continue to collect that information until we get to 30, where we'll have some statistical information that might be usable. So, uh, here's yesterday. It's a normal variation, neutral day, excess on the low, gap higher, perhaps a gap fill or trade to kind of a prominent point of control up here is possible. We got to see if we can't close this gap. If we close this gap and find acceptance in range from yesterday, possible move back to the downside in the value area special situation play. Oh, there's so much to be thinking about and so much to do today. And Robert, you've been trading for a little over a year. I've never seen the market be this way. It's okay to be confused. It's most important to recognize that you are confused and that you'd better size down or just sit back, relax, and wait till something comes to you. Don't try and look for trades. Be patient. A trade is likely to come to you, and I gotta try and keep them cheap. Gotta try and keep them cheap. All right. So gap rules so far in crude oil. You got our overnight low or overnight high just above. If we can't take that out, if we take it out and come back in, that may be something we can use. Here's the Nasdaq. All right. So we are looking like we're getting a test of weekly kickoff high already this morning. My notes, early we're like, okay, we're probably going to get a test of weekly kickoff high in the Nasdaq. It looks like we're getting a test of weekly kickoff high. We added 22,000 in open interest yesterday, and again, a lot of that is due to rollover. A lot of that's due to rollover. Volume was okay yesterday, and again, it's hard to read because of rollover. So it looks like we're getting our test here even before the open of this weekly kickoff high. We'll see what happens on the regular trading hour open if we are anywhere near this. Here's the 30 overnight inventory now looking a little bit long up against a potential resistance area. Now, the Nasdaq and the S&Ps have been kind of presenting different information. The Nasdaq has been a lot stronger. It's been a much bigger reach to get to this weekly kickoff high. So again, overnight inventory is long. Gap rules up against resistance. It's going to be an interesting morning this morning in the equities. Here's the TPO chart. No, this is the TPO chart. So again, we have a similar situation. Now, the Nasdaq did not take out the M period base of the late spike. This is our overnight low. But still, there's a lot of things to focus on down below there if we do begin to accept back inside yesterday's range that could still provide opportunities for longs. There are a couple of anomalies down here that don't show a lot of confidence, but this market changed as it took out all of these highs and became directional and began to trade out of balance. It is still trading out of balance. Here's our overnight high. Here's where we are now. There is a big gap. There is a long overnight inventory. If we can't close this gap, obviously the market is either going to range or go higher. But if we do come back, check the gap, there's 1, 2, 3 opportunities, I think, for us to try and take longs. Just be careful there. You don't want to risk a lot. That's why we're focusing on these levels because they can help us to limit risk. I say that there's all the way back down here, we can bring this market and still remain relatively positive as far as price acceptance at higher pricing. We get too deep into this, then things might change a little bit. Here's gold. Gold has been a bit of a pickle, and it looks like it's still a pickle. It's still very range bound, very indecisive, lots of long shadows on the highs and the lows, losing 2,500 in open interest yesterday. I'm really kind of expecting the open interest to kind of remain where it is through FOMC tomorrow. Volume has been just dying off. Volume has not been that gratuitous. The market is obviously seeking data. Anything can happen. Short time frame control. What does that mean? Well, that means that a lot of short time frame levels are likely to be respected. Look at the knee jerk after the CPI numbers, and then it just came right back to where it was. Did this wipe out any overnight inventory? Possible. So we kind of opened in range, but above value, knee jerked both sides. To be honest, I would be looking for opportunities at the ends of the knee jerks that occurred today or at last week's high or last week's low. I'm not really interested in anything here in the middle. I'm looking for proven extremes or proven breakouts outside of the extremes. I don't think we're going to see that today, knowing that FOMC is tomorrow. Here's the TPO chart. Boom. It looks like we finally traded to almost to this kind of assumed point of control down here. Just range bound, volatile move, but still well within range bound realm. How about the euro? What did it do? Well, it took another look towards the upside on a weekly kickoff high that's been here for a while. And it trades right to it. Weekly kickoff high 108.30 went out to 108, 108.28 within a couple of ticks of it. And we'll see what happens from there. This is an important level again, but the currencies are in rollover as well. So it's going to be difficult to gauge the auction process. Did we add? We added 16,000 contracts yesterday. Volume was okay, but again, the directional activity during rollover is difficult to read. Seeing the market drive higher a little bit this morning. Here's the 30-minute chart. We had overnight inventory that was long coming into the number. The knee jerk traded, back to almost a gap close, almost to a weekly kickoff high. Market still seems to be intent on trying to push to the upside. My idea would probably be if we do get to the last week's high, it allows me to limit risk. I might think about an execution here, and I might certainly think about an execution up here at weekly kickoff high. Here's the TPO chart. Yesterday, normal variation day, kind of a weak excess low, normal variation extreme. Now the market extreming higher. No gap close. Volatile, but accepting of higher pricing. You see how long our short time frame traders are. Here's the 10-year. This should be interesting. Still range bound. Still waiting for tomorrow. Not doing much. Added 27,000 in open interest yesterday. Pretty decent, but not huge. Volume was just okay. Market was really just kind of coiling here. Now the CPI numbers came out and pushed us higher because I think that a lot of traders and investors are speculating on the fact that this little drop in the momentum of inflation may cause the Fed to make that decision to hold, to keep rates where they are. And we're seeing that, I think, in the treasuries. I think we're seeing that in the equities. We're going to have to see what happens, right? We don't know. Nobody knows. And we have to see what happens. So we're going to be trading what we see. Range bound, breakout rules apply. Well, first breakout rules would be at last week's high and last week's low. Inside, we're looking at range bound rules. Here's the 30-minute chart. Got a nice knee jerk to the value low from yesterday, knee jerked up to here, which is kind of a value high from back here. The market is trading to visual levels. Overnight inventory is a little bit long. We don't really have a gap here. So, I'm going to be patient. If I'm trading this market, I want good trade location at known extremes. I don't want to get I don't want to get stuck in the mire here with all of the different short time frame levels that may or may not be respected. Here's the TPO chart. There we go. And there we go. So value high here, value low here, visual levels being respected. Which ones are going to be the ones that'll be respected throughout the day today? We don't know. Overnight inventory, was it long? Was it flat? I don't think it matters at this point. So again, my last week's high, last week's low are going to be the more important levels that I would be looking for opportunities today if I was going to be trading the 10-year. And for the natural gas, also coming into rollover, we lost 8,000 in open interest just yesterday. Volume was pretty decent, but we're in a kind of a 5-day area of balance. So we're in balance to break out rules. We get to the last week's high. That's the upper extreme of balance. We fade it until it proves wrong. Upon acceptance above it, we go with it. I'd say that's a bigger probability today than to check last week's low, which is the other extreme. Here's the 30-minute chart. Overnight inventory, certainly long. We've tested to this point of control. We can take that back now. We can just make sure that we know that that one was checked in regular trading hours. So, all of our overnight longs are looking for help. They're looking for buyers to come in and bring this market higher. One last thing that I wanted to, here's the TPO chart here. We did have a late spike. We've opened above the late spike. What rule is that? We're accepting higher pricing. Well, obviously, we're already accepting higher pricing, but where does the low come in? Do we test back down to the late spike before really trying to push to the upside? Look for good trade location in the day time frame. Again, because we are in about a 5-day, 6-day, 7-day balance here, it might be a better idea just to look for opportunities as the day goes on, as the early range is established, and focus on those extremes. One thing I wanted to mention about, I think it's crude oil, which has happened. We've created an island low. If we don't close this gap, this might be a situation where this low may stay for a while, right? So when we're looking at the daily chart, the market has come down to it. We have a day session range that was gapped down to and then gapped away from. If we can't close this gap, that creates an island bottom. Some people would call it an abandoned baby if you're a candlestick person, but it's a reversal pattern. Gap to it, gap away, look out. Look out. All right. Okay, so we do have quite the task ahead of us today, trying to figure out what to do in these markets. Looking forward to your trade ideas for Make Hogue Money. That's going to happen in about 5 minutes. See if I can get set up here so we can get a nice conversation in before the open, and we'll take a look and see what we can do. As a trader, I'm going to be always trying to remain patient. This week and last week, we've been discussing the idea that finding, important nuances has been challenging. I think we've found some important nuances today, but the market is so far from them that it kind of continues to be a challenging period of time. We have a lot of these markets in rollover. We know that the markets get a little bit strange during rollover. It's difficult to read volume and open interest. So I'm going to size down. I'm going to be very methodical in my trade locations because I'm just not going to risk a lot to get into anything. And to be honest with you, some of my best trades have been purely because they were cheap. Some of the best trades I've made. So we're going to look for cheap trades. We're going to see if we can find anything in Make Hogue Money. And we're going to survive today, and we're going to get through tomorrow. Tomorrow at 1 p.m. Don't forget the FOMC meeting. And then that will be it for me for the week after tomorrow, because I'm going to be heading out of town for a few days, and I look forward to getting a little R&R. I think I'm due for it, and then we'll be back, the week after, stronger and rested and better than ever. Anyways, take your deep breath. Stay humble, grateful, creative, and centered in your trading today. Be kind to yourself, be kind to others. Say a prayer for peace, and we'll see you in about 5 minutes for Make Hogue Money. If I don't see you, have a great day. Maybe we'll see you for Coach's Playbook or a reflection at the end of the day. Blessings.